Hey everyone, I'm Jim Hiltner. I'm the head of sales at Compound. Welcome to our second episode of Compound Thesis, where we discuss the intersection of crypto and the capital markets. Our guest today is Mark Palmer. He's a managing director and head of digital asset research at BTIG. For those of you that don't know, BTIG is a global investment bank. And Mark, really happy to have you on the show. Would love to dive in.
Absolutely. Thanks for having me.
But before we get to the good stuff, I thought it'd be fun to kick us off with a little icebreaker. I think you're in your house in New York now, and was wondering if you could be anywhere for 3 months and work remotely with no constraints, where would it be and why?
Yeah, it's interesting because we just finished up our second quarter earnings season. So this is the sort of thing that you think about when you're in the middle of crunching through earnings reports, fantasizing that you were on a beach somewhere. In my case, I think I would look at Koh Samui, small island in Thailand. I actually had the chance to visit there after I graduated from business school, had a few months off before I started a job in leverage finance. And the Asian market was in turmoil. The Thai baht had collapsed. And so I was able to live in a bungalow on the beach for $7 a night. So I went there expecting to stay for 2 days. I ended up staying for over 2 weeks. If they had good Wi-Fi and I could bring my laptop, I'd be all over that.
Yeah, not a bad way to wind down from earnings season. I was hoping that you'd say the Dean Dome in Chapel Hill, since we're both Tar Heels fans, but Thailand's not a bad option. So let's dive into your background a little bit so the audience can get to know you. Can you just share a little bit more about BTIG and your role there? And I'd really love to hear about how you're approaching the digital asset research, because it seems like you go pretty deep into some of the protocols and some of the projects and not just some of the public equities.
Absolutely. Yeah. I've been with BTIG for 11 years now as an analyst, had been covering financials and fintech all the way through. We had flirted with the idea of doing something research oriented with regard to crypto back in the 2017, 2018 timeframe when the ICO boom was ongoing, and ultimately decided that we were too early, which in retrospect was a good thing, I think. In 2020, though, particularly around the May, June timeframe, we began to see some rumblings that institutions were getting more interested. Then we heard that PayPal was ramping up its own crypto offering, and that led us to believe we should think about this more seriously. And come fall of 2020, we launched our effort, initially focusing on private projects and on conducting virtual fireside chats with the leaders of some of these projects as a means of helping our institutional investor clients to learn about the space directly from some of these leaders. So back then we hosted one of the first virtual fireside chats with Sam Bankman-Fried of FTX, which was actually a fantastic conversation, a tremendous amount of information. And he was sitting right at his trading turret. You could see the beanbag chair behind him where he sleeps or slept. And they were probably set a record for the number of F-bombs that were dropped within a 60-minute period. But again, just pretty much every minute had an enormous amount of alpha that was shared. So we went on, we focused on other projects, Paxos, Anchorage, and kept going. Ultimately, in April of 2021, we began coverage of public companies. And since then, we have picked up coverage of names like MicroStrategy, Coinbase, Galaxy Digital, and most recently added Silvergate Capital to the list.
Wow, very nice. Yeah, it seems like the evolution there from TradFi to fintech into crypto is a lot of our audience is doing the same thing or contemplating a similar transition, myself included. I just took the deep dive into crypto a couple of months ago and joined Compound after spending some time in fintech and financial services before that. And you're seeing the evolution on the investor side too. And we'd really love to dig into how BTIG is thinking holistically about digital assets, not just from a research standpoint, but across the investment bank, across your trading division. You could share a little bit more about your kind of like 360-degree strategy for digital assets across the bank.
Yes, happy to. So we're taking a holistic approach to digital assets. We began with research, and then from there sprung a capital market effort that has really grown very significantly over the past couple of years. We've added to that team. These are bankers who really know the space inside and out. There's no learning curve there, and they can really relate to some of the challenges and opportunities that are faced by digital asset companies. Our focus, I have a team of three research analysts. We are very much focused on that hybrid approach between private companies and public ones. I am every week writing about 2 or 3 crypto protocols or projects Again, the whole purpose here is to help our institutional investor clients to get to speed in the space. And I believe that one of the best ways to do that is to put a spotlight on some of the more interesting projects that are out there, even if they're only at the seed round of funding, or in some cases, even pre seed. The idea is to bring out some of the main trends and themes that are arising from the space. And another aspect of what we're doing with our BTIG corporate access team is a number of different digital asset conferences that we host. So this year alone, we began in January hosting a metaverse conference, had 60 projects that attended that. Then we moved on in June, we had a DAO tooling and infrastructure conference, which was certainly off the beaten path. But I think that DAOs as a structure are extremely interesting. And we were happy to be able to introduce a number of those firms to our audience. We then in July had a couple of conferences. We had a crypto staking and blockchain infrastructure conference that was highlighted by firms like Figment and Blockdaemon, that are big in the space. I'm trying to underline the fact that even during this crypto winter, staking has been just growing at leaps and bounds. Part of that in anticipation of the Ethereum merge. And so Figment, for example, shared with us that they had doubled their business in the first 6 months of the year. More recently, we had a music NFT conference in late July. And we are preparing to have a 2-day digital asset conference also held virtually on September 19th and 20th, where we're going to essentially double the number of projects in which we were focused a year ago.
Yeah, a lot to unpack there. I'm sure also on a personal level, you're probably participating in a lot of this yourself. We've heard a number of times, and the only way to really understand this space is to be active in it and to really get your hands dirty. So, all the work that you're doing in terms of evangelizing the space and sharing more color and introducing institutions to the founders is really doing a lot. And really, it's incumbent upon folks to start to dive in and get their hands wet or get their feet wet with the space. And so I'm just curious if you have a pretty wide spectrum of institutional clients, and institution is such a broad term. If you look at pensions versus like on the allocator side, funds, or the asset management side, or family offices, can you talk about how you're seeing them maybe across those three different categories approach the space, either in similar ways or maybe different ways, and where they are on the adoption curve?
Sure, happy to. It really began with the hedge funds and the family offices, those that may have fewer constraints as it pertains to reporting requirements and things of that nature, and perhaps some more tolerance for the volatility around the space, which goes on, and also the uncertainty that we still see on the regulatory front as it pertains to crypto. So that was really where things started. But what we have seen over the last couple of years is that that group has really expanded and now includes a wide swath of traditional institutional investors that are seeing what's going on in Web3, not just speculative crypto assets, but all of Web3, and are looking to get involved. And more recently, as you suggested, we're seeing pension funds, which are known for being some of the most conservative entities out there, understanding that some allocation to digital assets can actually create a very interesting risk reward opportunity. And so they're delving into that as well. Now, one of the main ways that we saw investors getting involved in the space initially is through investing in private funding rounds of crypto and Web3 platforms. And this has continued apace. We saw valuations skyrocket for a lot of these firms, especially in the earlier part of 2021. More recently, the valuations have become more reasonable as a result of the challenges that we've seen in the market environment. But the interest is definitely there. And it's funny because when the current downturn began, we were fortunate enough to host a dinner with Galaxy Digital and Mike Novogratz. And one of the things that he pointed out was that even though the market for crypto appeared to be going into a bear phase, the level of interest in crypto demonstrated by institutions, we were in a full-fledged bull market. And I absolutely agree with that based on what we're seeing.
Yeah, absolutely. It seems I listened into one of the fireside chats you hosted with FTX a few months ago or a few weeks ago. And one of the comments that came out of that, which really resonated with me, is that during the last cycle, institutions were starting to get prepared to start investing in digital assets and building some of the infrastructure, compliance, trading, whatever it might be, to get set up. but then paused. And it seems like this time around, that momentum has continued to plow forward, which you see the BlackRock announcement today of offering a Bitcoin trust. So you can see that a lot of the groundwork is being laid despite being in this crypto winter, and certainly seeing some of the price action reflecting some of the positive news that's coming out. And there is a lot of dry powder still sitting on the sidelines waiting to come into this space. And folks like yourself are helping get people comfortable to continue investing down this path. If you look across your client base, I'm just curious, there's a whole bunch of different services that you might offer: research, trading, crypto yield, investment banking. What types of sections of the market are you seeing grow faster than you anticipated? Or maybe even maybe the interesting case would be that slower than you anticipated for the different types of services that are out there for institutions?
Sure. It's interesting because a lot of the attention and focus that is put on the crypto space by the mainstream media in particular is really, again, on speculative tokens and trading volumes and a lot of what's going on in the retail space, which is an interesting story. And we've definitely learned a lot about what's going on among retail crypto investors in recent days, with Coinbase and Robinhood and others reporting their results. But at the same time, there's almost a different world as it pertains to institutional investors. And part of the reason why we decided to host conferences focused on staking and blockchain infrastructure on the one hand and music NFTs on another is because those were two of the areas where we have heard the most indications of interest among institutional investors. Again, staking is an area that we think is really overlooked by a lot of investors, but we think that it could very much come to the fore simply because it's an attractive source of yield at a time when investors are very much looking for that kind of yield, especially when the risks associated with staking are certainly recognizable and manageable. And that's an area that, again, we believe could get a huge boost if the Ethereum merge occurs as it has been said it will in the third week of September. Again, we're hearing firms like Figment saying that they think there could be a 10x increase in staking volumes as a result of that. And liquid staking has become an option for institutional investors. We saw Blockdeal offer a program along with Stakewise in a partnership that allows for institutional liquid staking, provides for KYC and other screening that makes institutions comfortable they can do this without running afoul of regulators. And then we have Alluvial, which is another protocol that is being put together with the help of Figment. And actually, Coinbase Cloud is one of the contributors to that as well. So I think that once there's a greater recognition of the benefits of staking, which we think the merge will help to create, then the demand for that area could really take off.
Yeah, absolutely. And you mentioned something there, which we hear often, which is not a surprise from institutions, which is KYC compliance, the regulatory side. And there's a lot going on, and we don't have enough time to cover this. It probably could be a whole separate episode. What do you see as some of the challenges or some of the opportunities, I guess, that will be unlocked as the regulatory landscape continues to take shape? And do you anticipate that starting to be a little bit more clear in the next coming months, quarters, years? Just give your thoughts in that space.
Sure. It's pretty clear that the single biggest impediment to institutions getting even more involved in the crypto space is the concern about what's going to happen from a regulatory standpoint. The last thing that anyone wants is to make big investments in crypto tokens and then have the SEC announce that the crypto tokens that they are holding are actually unregistered securities. It would be the mother of all rug pulls if enough tokens were under that umbrella. With that said, we do believe that Congress in particular has been taking a much closer look at this space. We don't anticipate that there's going to be much movement here in 2022 as a congressional election year, but we are more optimistic about 2023 when we could see Congress begin to come up with some constructive solutions, first for stable coins and then move beyond that. What's interesting in that most recent conversation we had with Sam Bankman-Fried of FTX, he stated that he believed that we would see a much greater degree of certainty around crypto regulation a year from now. Was something of a cryptic comment from him, but of all folks, he certainly has the vantage point that would enable him to have a clearer picture of that.
Sure, absolutely. Yeah, no, it makes a ton of sense. And I guess to give you one last question before we wrap up, I'm sure you're dealing with a lot of funds that have exposure to multiple asset classes and are not just boutique, specialized, focused into the digital asset space. Could you talk through how you're advising clients on what role digital assets play in their overall asset allocation strategy?
Yeah, there are a number of different ways that folks can play crypto. Of course, where we're really trying to help is through the lens of equity investing, looking at companies that have a lot of upside if they execute on their strategies and if we see increased adoption of digital assets going forward. What we believe in general is that all institutions should be looking at this space seriously because it's not going away. Despite what some of the naysayers might have been saying of late, we can point to plenty of evidence that there's significant growth currently and more ahead. But it's really about understanding the risk reward in the context of the volatility of the asset class and how that impacts a particular investment, whether that is an equity fixed income, which is now more of an option in the crypto space than it had been a year ago with names like Coinbase and MicroStrategy, or the tokens themselves. So I think that the way to look at this, of course, is based on an adjusted potential return, taking volatility into account.
Sure, absolutely. Mark, I really appreciate the conversation today. It's been fantastic. Any closing thoughts before we let you go?
Yeah, thank you very much for having me. I appreciate what you're doing at Compound Treasury. And Robert Leschner Compound was actually one of the first folks who agreed to do a virtual fireside chat with us. Very much appreciated that and appreciate your time today.
Yeah, no, thank you again, Mark. I really appreciate it. We'll definitely do this again sometime soon, and look forward to seeing you in New York in a few weeks. We'll be there just before your conference for digital assets. So look forward to seeing you then, and hopefully you get a chance to wind down from earnings season. Maybe make a sneaky trip to Thailand if you can.
Wish. That'd be great.
Thanks everybody for tuning in to this episode of Thesis. We'll be back soon with another great guest. Stay tuned for updates on who's going to be joining us next. Thailand might be a little bit of a hint. Looking forward to that episode. Thanks again, Mark, for your time.
Absolutely.